All right, this is the Euro US dollar, and I realized that that last series was entirely British pound. And I don't want you to think that it's only the British pound that this applies to, because it doesn't. That's not true at all. It also applies to the euro, but what I'm saying is that the British pound offers much better ranges for opportunity to take some pips, where the euro, there's a little bit more risk to volatility reward ratio. And there is with the pound too, but with the euro, sometimes you have to sit on trades a lot longer to get your 20 pips. And you're best to go for 20 pips on the euro, and you can get closer to 30 on the British pound simply because of the difference in volatility. Looking at this chart now, here's, for example, here's a day's low, and boom, it rejects the following day. Now we're up here, and you see how prices formed a base here at 27.60, and then we rally up to 28.80. You may or may not take this trade. If you did, there was still some room, but look what happens on the next candle. Of course, you're going to have your stop. You're going to have your stop above this high for sure, with some cushion, and sometimes this price will fall short, and sometimes it will go through. That's the nature of the market. So we have to decide where it is that we want to make our entry when we're live in the market at the time when we place our market or our limit entry, because you can have a feel for what price action is doing at the time to help you to determine where you want to place your entry in this type of scenario. But because we rallied 120 pips, that makes this trade a higher probability trade. Again, we rallied 120 pips. That will make this, when price is up here, it makes it much more sensitive to these previous day price levels, because those who are controlling the majority of the flows have decided, unless there's some stimulus coming into the market, they are comfortable between 127.20 and 29.20, this 200 pip range. That's just where they believe the euro US dollar currency valuation is fairly valued at the moment, and they're remaining within that range. And because we are high on the high side of this range, then it gives us a good trade opportunity. Let's pull up some pivot points now to have a look. And we are on the high side, so we're actually at M4 here. This is equivalent to M4. This is R2, R1, M4. Central pivot. Price moves from M2 to M4, M2 M4 day, and bounces at the high very nicely. Very, very nice bounce at the high, as we see price rejecting, moving downwards to first support and consolidating. Euro US dollar 60-minute chart. London opens, rallies, tests previous day's high. It rejects. So the high was 26.69 to a low of 17. Okay, so 50 pip bounce, not bad for the euro. It's pretty much consolidating. Attempts to move below the lows, but trades and continues to trade above. Central pivot here. It goes down to about M2 and reacts. So you wouldn't trade this one until it held and traded above this level. So this candle is 07 to 49. It's a 42 pip. It's a 42 pip candle here. You wouldn't actually trade this one until you saw that price was committed and really refusing to move below these lows. But it's a pretty tight consolidation. It might be a tough trade. This trade, however, was a good one. This is a Euro 60-minute chart, and I just want to remind you of one thing. This high right here and price comes up and challenges that high. But you see where these highs are, and this one in particular, it's more ideal. I mean, you can trade these highs naked just as price comes up and penetrates the high, but there's going to be huge differences in probability between, let's say, for example, if price makes a big move before making a run at the high, or if only has a small range to move before penetrating through the high. But ideally, it would be the highest probability or the most secure trade if this high here was being capped by a key level, be it a Fibonacci level or some key fib level or support resistance and so forth. In this case, you see this trend line that comes down here. It actually comes from a daily chart, which is, I won't bring it up actually, but it comes from way back on a daily chart, and price consolidates into the trend line. Now, there was a trade here, which in fact I entered, and I believe it's in the live trade section, and you'll see sort of what I had done to walk through that trade scenario. But again, you want this to be capped by a key level. That is the highest probability scenario for your trade to come to fruition. But in this case here, we consolidated into the trend line, and once it had done so, it moved considerably. This was late New York, this was Asia, this was mid European session when it tested the highs again and fell.